So I was just feeding my dog one day and looking through my awesome live stream that I do bell to bell when suddenly Nate P says Alexis Goldstein just tweeted she's read through the DD and thinks it's Goliath versus Goliath. What is going on here, guys? Have a great day on me, no charge. I hope you guys are ready to answer the question of what Alexis Goldstein now thinks is the current run-up. We've talked about long whales before, but we've majorly pushed them to the wayside because we care more about what the DTCC is regulating and the ramifications of the 005 rule already starting to cause a major shakeup. If you guys weren't part of that live stream, I talked about how FTDs do only have 2 to 4 days to cover. So now with the 005, how are they going to be able to continue that cyclicality of FTDs? Well, let's see if Alexis Goldstein can bring back the story about long whales. She says, new reporting by this user shows at least one Goliath, right? She originally didn't think it was about David and Goliath. She thought it was Goliath versus Goliath. Where are the long whales coming in? Hedge fund Maverick Capital made big money off of GME and other value stocks, and we're going to cover that right now. The only thing that you need to do on your side is to make sure that you've strapped in your seatbelt, and then you make sure that you've already pressed that like button for the YouTube algorithm to be fully defeated. It's like a dragon in Dungeons and Dragons. You have to basically claw at it, and then that'll get more apes to watch this video. And make sure that you've hit that subscribe button already with the notifications turned on so you don't miss a single live stream and don't miss out on the squeeze itself. I'm going to be telling you on live stream when it's happening. So here we go. Maverick's bets on unloved stocks pay off in value rally already. Big FUD article, unloved, excuse you, we like the stock, at the very least I do. As a reminder, I like the stock, you don't have to. Paper hands, that's why the scissors are in the chat for you. Okay, a clutch of hedge funds, including Maverick Capital, has ridden a surge and beaten down parts of the equity market to post large gains so far in 2021. Despite losing about 9% of its flagship hedge fund in a choppy January, Lee Ainsley, Dallas-based Maverick, which manages $11 billion in assets, gained roughly 25% in February and a further 20% last month, according to figures sent to investors and seen by the Financial Times. We have been so excited to say that this is an underdog story, right? This is us fighting the big guys. But what if we have big guys on our side too, right? Siege giants, right? Tree ants, right? They are just lumbering behind us. Maybe we don't hear them because we are charging ahead full force, but they may be the deciding factor. They understand the hedge fund tricks. They understand what there is at stake. And if they have big money on the line, boy howdy, do we want their help. Let's find out a little bit more about how much money they actually made. The bets on previously unloved value stocks in sectors such as retail, airlines, and banks has left Maverick up about 36% in its flagship fund this year to late March, making it one of the world's top performing hedge funds according to investors. Numbers sent to investors. Maverick declined to comment. They're keeping it quiet. The performance bolstered by a long-standing position in SoftBank-backed e-commerce firm Coupang, which floated last month, and a timely bet on GameStop, whose share price rocketed this year, shows how abruptly hedge funds warmed to an investment style that has long been out of favor. Value stocks have badly lagged behind more expensive stocks with faster earnings growth in sectors such as technology for years, but they have enjoyed a rally in recent months on expectations that progress on coronavirus vaccines and the easing of lockdown restrictions will lift economic growth and improve their earnings. I can't believe their first thing wasn't apes are here and they're willing to pump this stock and believe in the stock despite the ups and downs. That should have been the very first indicator here. That has rewarded funds that held onto their value positions or switched into them more recently. Managers betting value stocks are finally ripe for a rebound were confounded by the onset of the coronavirus pandemic last year, which further battered these sectors. In October, $10 billion in assets AJO Partners announced it would shut, saying that the drought in value, the longest on record, is at the heart of our challenge. Let's take a look. We have value stocks versus growth stocks. If you guys don't know the difference, it's pretty simple. This is just general, like cutting the line in half based on a couple of indicators. If you guys want to see a video about that specifically, drop in the comments below. Let me know, as always, what you guys want to see. So MSCI World Indices, look at those value stocks start to push, and especially between February of 2021 and March of 2021, above those growth stocks. Ainsley, a technology specialist and a Tiger Cub who previously worked at Julian Robertson's Tiger Management, profited last year from contrasting bets on tech stocks such as Netflix, Microsoft, and Facebook. Mr. Bill Huang, also a Tiger Cub, unfortunately, a bit of a criminal, as shown by the criminal guilty pleads that he had from the previous financial crisis, was back a couple of weeks ago, causing almost a tiny financial crisis when his hedge fund got margin called. So not all Tiger Cubs grow up to be lions. I think that analogy makes sense. But towards the end of the year, Maverick refocused on the potential for a strong economic rebound, according to a person familiar with its positioning. Following the example of previous market rebounds, such as in 2003 and 2009, when beaten down, economically sensitive stocks recovered quickly. It began buying. Sydney-based Platinum Asset Management, which runs $20 billion, has also tapped into the rally in value stocks. Since the start of November, just before the BioNTech Pfizer vaccine was revealed to be more than 90% effective, the global MSCI World Value Index has risen 29%, outpacing the growth gauge, which is up around 19% over that time. Platinum, co-founded by ex-Bankers Trust managers Kerr Nielsen and Andrew Clifford, has gained around 30% in the flagship global fund since the start of November. Platinum cut positions in stocks such as Facebook, Google, and Tencent last year, and instead bought cyclical stocks such as chipmaker, Samsung Electronics, and Micron Technology. Valuations were such that you knew you would make money, said Clifford, the firm's chief executive, who added that being able to buy some unloved stocks at book value was as obvious as it gets in investing. Also profiting is New York-based Axonic Capital. Its Credit Opportunities Fund was hard hit during last March's credit market sell-off, but has gained around 8% this year to March, said a person who had seen the numbers, helped by a rally in some of its asset-backed securities focused on aviation and aircraft as lockdowns ease. However, some managers now question whether recent gains mean the rally in value stocks has run its course, at least for now. Here's the FUD. Okay, so Maverick expects the rally to come to an end and that big tech stocks with stable growth look attractively valued again, said a person familiar with its positioning. And Platinum has trimmed its exposure to names that have performed strongly in recent months, although it has not sold out entirely. The stocks have rallied very hard, said Clifford. We're in a difficult middle ground. Over the next 3 to 5 years, there are returns to be had from value and cyclicals, but in 2021, maybe there's not a lot more to be had. Okay, so we are seeing that there is a hedge fund on our side, but these hedge funds are likely starting to pull back in general through value stocks. This is an important step along the process, though, is to be able to get the view out, and you know that some apes are going to read this, not get to the very bottom, and basically see it as a bullish article, and then get them into the moon platoon. So if you want people to watch this video and be able to say, hey, this video is ultimately bullish and a reason why GME and AMC and other value stocks are likely going to be a Goliath versus Goliath battle, you are going to want to like this video, smash that bell button and that subscribe button so that more apes are finding out about this video. Thank you for those of you who do support the show, either through Patreon by clicking that link down below or pressing that join button next to the subscribe button. I really do appreciate you guys. I'm about to have no more room in this final end screen, and thank you, Nate P, for letting us know. Once again, if you guys want to let me know something on the live stream, I go bell to bell, and you should not miss out on a single live stream. Thank you for joining, and we'll see you in the money. Peace.